The thing about startups is that, you have a constellation of things to take care of. You got to think about getting new clients. You got to generate revenue. At the same time, you need to find funding, right? You need to run the business. And so in today's conversation, I want to talk to you about how to get a startup business line of credit with no income. So here are the steps I really want you to follow right now. And the very first thing is you need to understand the difference between secured and unsecured line of credit. I get it. You're a startup. You probably don't have money. But my question to you is, at the personal level, do you have an asset that you would love to pledge on a line of credit? This would not be the wisest decision. I get that. But in some cases, if it's really complicated to get an unsecured startup business line of credit with no income, maybe you want to look at the secured route. But this is only if you do have assets. If you have an asset you can pledge on the personal level or at the business level, for that matter. The whole thing is that some startups actually, like people have, you can have a company car. So you can actually pledge the car if the car is fully paid, of course, right? This is important because if you have a secured versus unsecured line of credit for your startup with no income, you're going to have a delta in the interest rate. In other words, a secured business line of credit will be cheaper for you versus an unsecured business line of credit for your startup, especially if you have no income. I mean, that's the the definition of a startup, right? I mean, it's very rare that a startup makes money in year one or year two, for that matter. So it is a decision that you have to make. How important is, let's say, the APR for you? Because some startups are really, they do pay attention to the financing cost, okay? And some startups don't really care. They just need the money. They just need to have access to working capital, to a line of credit they can use to pay staff, to make payroll, to pay suppliers, to actually finance research and development. So you got to ask yourself, okay? So step number one, you want to ask yourself whether you want a secured or unsecured line of credit. And if you have a team, if you have a staff, if you have some personnel, have a conversation, brainstorm around the idea to know exactly which strategy, which option will fit your startup business. The second thing I want you to do here, by the way, boss, welcome back to the show. It's really a pleasure to have you. Always a pleasure to have you. So the second thing I want you to do here is to research lenders' requirements for getting a startup business line of credit with no income. See, the whole thing here is that when we talk about startup and no income, you have two detriments right away. You have two risks, two major risks. I mean, those two words, like, they're just like, when lenders hear those words, they're just like trying to cover their asses like crazy. Because first of all, when you have a startup, you have a risk element, right? It's a business that has been in existence for, let's say, a few months, a few weeks. And we all know the probability for a business to survive past year one, year two, or year three. The statistics are really grim. We know that. So the lender is constantly thinking about something called going concern. So in accounting and financial reporting, when experts talk about going concern, they're talking about the company's ability to survive, let's say, the next recession or a downturn in the economy. Those sort of detrimental elements. So that's the first thing. That's the first detriment, startup. Then you are talking about no income. So the lender is asking, if you have no income, how are you going to repay whatever you tap into the business line? Those are decent questions. Those are reasonable questions, and you got to think about the answers beforehand. Don't you actually find yourself in a situation where they're asking you a question and you can you just stuttering. You have no idea. You haven't prepared, boss. You haven't prepared. So this is why you want to prepare. So you want to research lenders' requirements. What are they asking for? What are they asking for in terms of business longevity? Like how long the startup must have been in business. Sometimes for startups, they'll take you if you have 3 months or 6 months. So you want to research that. You want to research business revenue. Some startups, very rare though, generate revenue in year one. Maybe that's your case. Then you're very lucky that you have actually found a niche. You have found a business model that's very profitable, that you want to actually milk it as much as possible. So What are the requirements in terms of business longevity, business revenue? Sometimes they ask credit scores of the founders. So those are the top three. We do have more, but in the interest of time, I just want to focus on those three for now. The third thing I want you to do, boss, I want you to gather the required information. So let's say you have a gather intel, right? You spoke to the lenders. You probably have. Don't look for a lot of lenders though, because sometimes when you have like 5 or 6 lenders, it's just kind of crazy. If you're interested, just drop us a comment, and we'll let you know the top 3 startup business lenders who will actually approve your business line of credit based on your industry and geography. Okay, we'll let you know. We have the data. We have about 103 business line of credit lenders in our database, and we'll just give you the info, and not a problem. Okay. And I just want to quickly remind you of today's topic. I'm having a conversation with you about how to get a startup business line of credit, no income, approved no matter what. Okay. And so when we talk about gathering the required information, I'm talking to you about, see, this is more a culmination of the conversation you started with the lender, right? Remember, I just told you before to research the lender's requirements for getting a business line of credit. Now that you have actually talked to the lenders, you have a clearer idea about what they want. It's about time that you actually gather the required information, right? And basically, we're not talking about anything complicated. Business licenses, check. Articles of incorporation, check. Or articles of organization, check. Personal and business bank statements, check. Profit and loss statements, check. Business plan, check. Personal and business tax returns, check. Those are preliminary things that we do. We're not that you need to have, okay? And when we talk about profit and loss statements, remember that we said that we were looking for a business line of credit for your startup with no income. So what is the profit and loss statement doing here, right? That's a valid question. I know you're going to ask that question. Yeah, I'm reading your mind, Well, okay. The thing is, here we're speaking about projected P&L, not actual P&L, not actual profit and loss statements. We're speaking about projected profit and loss statements. So you're going to have to prepare, or have someone prepare for you, financial projections. The fourth thing I want you to do, boss, son, daughter, uncle, and grandpa, grandma, wake up. I'm talking to you. The next thing I want you to do here, if you're looking for a startup business line of credit with no income, you need to select a lender who is suitable to your situation. Again, we have a list of lenders. We can actually provide those to you, depending on your geography, your state, city, county, township, and whatnot, and your industry. Because some lenders are kind of like skittish about some industries, and they don't want to, like they're just trying to cover their asses, which is really understandable. I mean, when you think about the state of the economy right now, with everything going on, with some lenders actually exiting some industries, with the regulators constantly adding new layers upon layers upon layers of regulations, it can be scary. It can be really scary. If I were a lender, I'll probably have some of the same reaction too. But so you got to select a lender, and when we think about selecting lenders, there are some criteria that you got to really pay attention to. For example, the maximum credit limits for your startup business line of credit with no income. The repayment plan. Remember, we do have like draw periods, the time for which the line of credit remains open, and repayment periods vary. So you want to pay attention to what each lender offers, and you want to choose the one that best suits your business needs. Okay, very important. What about the requirements? So it's really important to look at the requirements to be sure your startup business can meet them. What about the associated fees? A lot of times people are so happy because they get the money. I got my business line of credit approved. Blah blah blah. They forget that they have to pay like 10% or 20% in fees. Yeah, you have closing fees. You have draw fees. You have a whole list of fees that some lenders will apply to your business line of credit. Okay, So be sure that you read the fine prints. Make sure that you read everything. You read everything. You want to compare the fees and interest rates with each lender to ensure you are getting the best possible deal. And also think about some features, like sometimes in some lenders, they have a special features, like they may offer perks such as credit monitoring services or reporting payments to a credit bureau that make their loans or lines of credit a lot better. I would say that as a matter of principle, you always want to go for the lender who will actually report your transactional data to the business credit bureaus. This is going to help your startup build business credit, which you will need anyway, right? The next thing I want you to do here is I want you to really apply for the business credit, for the business line of credit. By the way, I want to quickly remind you of today's topic. We're having a conversation about startup business line of credit with no income. How do you actually apply no matter what, right? How do you apply and get approved no matter what? And the thing, and again, we're not speaking about a very small business line of credit for your startup. We're talking about something consequential, something that can help your startup business move from point A to point B or point C and all the way to point Z, because it's all about scaling. If you're a startup, you want to keep in your mind that scalability is really important, right? Because the opposite of scalability, when we analyze a startup, is static. If you're not scalable, you're static, and you don't want to be you do not want to be static, boss. So apply for your business line of credit. Now, when we talk about applying for the business line of credit, you need to understand that you do have different types of business line of credit. The business lines of credit, they are available to startups. You have the one that the secured business lines of credit. You do have the unsecured business lines of credit, but in some cases you do have a distinction when it comes to revolving versus non-revolving. So you will have revolving lines of credit for startup businesses, and then you'll have non-revolving business lines of credit for startup businesses. So for your non-revolving lines of credit, you can still choose when and how much to borrow, but your credit limit determines the total amount you can borrow. So this is just a clear distinction, okay? And traditional lines of credit have a draw period, which is when you can take out loans and only have to make small or no payments. And after that, the repayment period begins, and you repay the outstanding balance based on your repayment terms. But again, every bank or business line of credit lender decides which one is better for them, or and for you also, right? I want to talk to you about something that is important, and it's really important when we talk about startup business lines of credit with no income. I just said it. It's important to understand that there are fees, there are credit costs, there are fees associated with that credit product. Why am I telling you this? Well, I'm telling you this because if you are running a startup, chances are you are counting your pennies, right? You have to be very, very economical here. You have to actually count everything. You have to account for everything, which means what? You have to account for cost and fees, and ask yourself, wait a minute. What is the opportunity cost here? Is this deal really in my favor? Right? Those are decent questions that you gotta ask. So when we talk about business line of credit, cost and fees, you got to think about the draw fee. You got to think about the payment processing fee. You got to think about the wire transfer fee. You have to think about the late fee. You got to think about the prepayment penalty. So the picture I'm trying to paint here is that you have a catalog, you have a diversity, you have a whole array of fees that you got to be comfortable with. You see, I'm not sitting here telling you, hey, listen, yeah, I want you to run away because the fees are crazy. No, I'm just saying to you, it's important that you know about the fees, that you are comfortable about the fees, that you have included them. You've included those fees in your calculus, in your business model, in your funding strategy to make sure you're comfortable with that. Okay. For example, the draw fee. Many lenders charge a draw fee each time you tap into your startup business line of credit, which could be anywhere from 1% to 4% of the amount you withdraw. Okay, so there's like a de facto interest, like extra interest that you have to pay anytime you actually tap into the line of credit. So think about that. Okay. You also have a wire transfer fees. You have late fees. Okay. You have prepayment penalty. So you may be charged a prepayment penalty if you pay off your loan early. So this fee is less common with lines of credit for startups though. Okay. Very important to remember that. But overall, one thing I want to say here is that remember that you need to actually you also have the ability to do to apply for another line for another credit product. So if a startup business line of credit is not working for you, you could just get a loan. You can get a startup business loan. One thing I want to say here is that when we talk about startup business line of credit with no income, you need to understand that the fact that you have, I think I said that before, the fact that you have two detriments, startup and no income, you need to find a way to counter that. You need to find a way to offset this quote unquote negative risk factors. And the best way to do this is to actually have a good credit score. If you have a good credit score, you will find out that things will be a lot easier for you. You will find out that your approval odds for lines of credits and loans for that matter will actually improve significantly. And one thing I want to say here is a lot of folks are asking questions about, yeah, I have a startup and I'm looking for a business line of credit, but I have no income. How do I go about that? Well, I answer this. Make sure that you have your business plan. Make sure that you are a legit business because, some people say, well, I have a startup. But when you start digging, you realize they don't have a startup. They have a startup in their head. There is no real startup. In other words, they haven't actually filed paperwork, the proper paperwork with the state. Okay, they don't have articles of incorporation filed up. They don't have articles of organization filed up. They don't even know they're a legal structure. They don't know if they're an LLC. They're a C corporation, an S corporation. That's kind of bad. That's really bad. So if that's the case, what's going to happen here is that the lender might ask you for a personal guarantee. Okay, the lender will ask you to provide information and collateral that will actually allay their fears that you might actually default on the line of credit. This is why your two important elements, you have the business plan and your financial projections, will help you actually, I would say, depict another picture. Because the whole thing you're trying to do here is you are trying to reduce the risk level that a lender will associate with your startup. Okay, which means that you have to do some preparation. Again, we're not talking about having a small business line of credit. No, we're speaking about 4 digits, 5 digits, 6 digits. And there are ways. I mean, we have clients, we have business clients for whom we were able to negotiate 6 digits business lines of credit, even for startups. So it is possible, but there is a formula. There is a code. There is logic. Okay. So you do your research and you really are sure about what really works for you. Thank you so much for your attention. I really appreciate it. So I just want to quickly recap to this conversation. So we just had a convo about how to get approved for a startup business line of credit with no income. So you need to decide between a secured and unsecured business line of credit for your startup. You want to research lenders' requirement for getting this kind of product. Okay, you want to gather the required documentation. You want to select a lender, and you want to apply. Thank you. I'll speak to you another time. Until then, remember, stay blessed and stay marvelous.